Good afternoon, Barry, on this sparkling afternoon here in the Rocky Mountains as we speak.
Hi, John. It's beautiful out here today. It's up close to 90 or 80, I think.
Oh my goodness. Well, we're a little higher than you here in Monticello, Utah. We're only hitting out at 75, so that might even be better. But all right, unfortunately, we have to discuss a rather depressing subject. We're in the sixth item of our series of what we need to do to at least not fall further into the deep hole we've dug for ourselves, and maybe even make some progress digging out of the hole. We talked about the Department of Government Efficiency, so that's ongoing. Although, given the depth of the problem, maybe a little more chaotic than most people would like. But so we're addressing waste and fraud, trying to become more efficient. We've recorded a couple of videos for folks to look at on faster economic growth. That's part of the formula and dealing with our debt crisis, as we need to grow faster. And as you and I have documented, there is a debt fatigue. So not only are we up against the normal special interest items that slow our economic growth, we're up against the effects of debt on economic growth. So we need to do that. Probably the most important thing is a low cap on spending growth. And unfortunately, I've been reminded recently that President Trump is against that for reasons that I have not discovered. Hopefully, I'm wrong, and hopefully, we can change his mind, because that seems to be the linchpin of all of these other things on our list, especially the ones further down: load shedding, the possible need to increase taxes if we want to avoid printing money. Can't sell all of our bonds. Might have to increase in tax rates. And then the one that we're going to spend a few minutes discussing today is raising revenue through selling mineral right assets, of which the federal government has, by various estimates, $60 trillion worth. Now, that might seem, well, wow, we're safe. We only owe nearly 40 trillion only, and we have 60 trillion in assets, but you can't just liquidate those all at the same time. And without this spending cap, Congress will probably just spend most of it. So we need that spending cap before we can sell off mineral assets and apply them to debt, or be certain that they'll be applied to debt. So Barry, I read your piece that you wrote with Bill Owens on that, and indeed, yeah, we've got some issues there in deploying those mineral assets in addressing our debt crisis.
Yes, I think that's the option that might have some viability. As you say, the mineral assets are far in excess of the debt. So the question is, if it was just a straightforward transaction where the government sells or leases some of the mineral assets and takes the money and pays off the debt, that's a great option. I mean, that's a great policy, and I think it could have a significant impact. The problem, and what Bill and I were writing about in our op-ed, is that is not what they're talking about. And what President Trump has created is a sovereign wealth fund and a cryptocurrency reserve. In simple terms, what he's going to do is buy some Bitcoin and put it into a reserve. Well, and he doesn't explain how he would pay for it. He says he's not going to pay for it with taxes or debt. So the question is, how do you pay for that if you're going to buy Bitcoin? Well, obviously you're going to increase the money supply. And so basically, when you start buying Bitcoin, that transaction increases the money supply, and now suddenly you've created a real problem. The inflation rate is already above the Fed's target. So you're exacerbating that. You're making it more difficult for the Fed to control inflation. So what they're talking about seems to me to be one of the worst options possible.
Yeah, and the interest rates are sneaking up again, are still above 5%. 5% of the outstanding debt is about a third of our revenue. And as you say, we haven't gotten the inflation rate back down to the target, and it's lower than the interest rate on the the debt. So it seems to me like there's more upside on the interest rate than downside. That's another threat. Yeah. So we got to make some money off the mineral rights, but there's a question of how fast we can make how much, because we can't sell them all at once. As you said, the transaction is not going to be, okay, we've got 60 trillion in mineral rights, ka-ching, we're done, because the debt is lower than that. It will take a long time to extract anywhere nearly 60 trillion out of those assets. And again, that assumes Congress doesn't go spend all of it in the meantime.
Well, and I think the other problem that will happen if he starts buying Bitcoin is you're fouling up the cryptocurrency markets. At this point, the cryptocurrency market is essentially a private market. And so different private organizations issue cryptocurrency, and it's a competitive market. And some of them fail, some of them make it. It's sort of like the wild, wild west back when we had back in the early 19th century, when you had banks printing currency all over the place. Well, what should happen in that kind of a market is that over time, people gain confidence in a cryptocurrency, and it becomes widely circulated. But what Trump will do if he starts buying Bitcoin for the sovereign wealth fund, he's creating a legal monopoly in that cryptocurrency. Now suddenly, that's going to create a problem in the cryptocurrency market. You can't compete with legal monopolies. I mean, that will drive out much of the private cryptocurrency that's issued. So there are lots of unintended consequences from this approach that he's proposed.
We are taking a lot of gambles. There's that one, as we speak, we're in the midst of the riverboat gamble on the tariff front that will hopefully yield freer trade and less vulnerability on the national security issues. But there's no telling. I like the analogy that Senator Cruz used recently. We're throwing long to the back of the end zone, and yeah, if that pass is not completed, yeah. So yeah,
the tariffs are inflationary. And nobody is quite aware of the fact that this cryptocurrency scheme to buy Bitcoin is also inflationary. If you combine the two, it's not clear how high the inflation rate will go. But that's certainly what we advocate would be just simply, if you're going to use mineral resources to help pay off the debt, simply lease or sell some of those mineral resources and pay down the debt, buy some of the debt held in the private sector. And that could be a viable option, but nobody's talking about that. In fact, nobody's talking about the debt crisis.
That's the most amazing thing at all. You know, I would, by the way, I would encourage our listeners to also visit Les Rubin, who I met recently, who's got some great stuff on that to get the attention of the basic mainstream person whose attention we need to get attention to the debt crisis. Because yeah, right now 90% are unaware of it for whatever reason, and half of the rest don't care. So maybe to conclude our call for today, we can mention that George Will also said it perfectly a few years ago. We're sleepwalking into a crisis. And a few years ago, we were already at a fiscal cliff, and it's gotten worse, of course, with adding $2 trillion of new debt to it each year since that book was published 4 years ago. So, yeah, we need to do the 6 things that I listed at the beginning of the video, and sadly, all of them, including the tax increases, need to be on the table, because we cannot afford to be in a situation, I was talking to Les yesterday, we cannot afford to be in a situation where we can't sell our bonds. It's a national security threat, and default, whether it occurs literally or figuratively by printing money like crazy, is really a devastating alternative. And with that, we will...
Well, we're already at that risky point, because yes. I think that the bond market this week has been as shaky as I've ever seen it. So I think we're not talking about a debt crisis out there 10, 20 years from now. We're talking about a debt crisis that is impacting us today. So hopefully we can get people's attention.
That's a good point, Barry. A lot of people keep saying it's about our grandchildren. No, it's about us, right?
Yes.
Yeah, we're on that edge of that fiscal cliff. The toes are tickling over the edge. The bond buyers are getting jittery. A lot of the traditional bond buyers have already exited the market. Some of them are talking spiral, which is a pretty scary word, which just says it's a self-reinforcing crisis. So, yeah, we need to get folks' attention, because without their attention, their representatives are not going to cut spending or do some of the other things that need to be done, including calling the convention for the constitutional amendment to restrict spending growth. That's probably the most important thing Congress could do right away, is recognize that enough states have fulfilled the Article 5 requirement to call the convention for that single issue, the cap on spending growth, and call the convention on that. Talk to you soon.